Welcome back, you're watching the MF Guide. We now put the spotlight on Quantum Mutual Fund's latest offering to investors. Quantum AMC will unveil its first open-ended ESG fund, Quantum India Equity ESG Fund, where ESG stands for Environment, Social and Governance. The fund will primarily invest in stocks of Indian companies and will be open for subscription from 21st June to 5th of July. To get more on this fund, we are now joined by Chirag Mehta, Senior Fund Manager at Quantum Mutual Fund. Welcome to the show, Chirag. And thanks so much for joining us. Chirag, your new product is based on a new concept of environment, social and governance. Could you please elaborate more on this?
So if you see ESG, it stands for environmental, social and governance, right? So we are trying to identify companies that are leaders in their industry when it comes to taking care about the planet and the people, and at the same time they are more sustainable businesses which will drive the long-term performance of these companies. So if you look at in terms of environment, we are looking at factors like, is the company impacting climate in a negative way? What are the waste management practices of the company? What is the energy? Is it coming from renewable sources or they are still reliant on coal-based energy? In terms of looking at social, we are looking at the labor practices that the company has, whether they care about their employees in terms of the safety standards, what are the pay practices that the company has, what is the impact of their corporate social responsibility on the society, whether the CSR is for real or is it just for namesake, and what is the impact it has on the society. And when it comes to governance, we are looking at how the company takes care in terms of the minority stakeholder rights. We are looking at board independence in terms of is the board truly independent or dependent. And we are also looking at factors like executive compensation, whether it is very skewed in terms of going towards the CEO or the managing director, or whether every employee is rewarded equally. So those kind of factors which are non-financial in nature, but will tend to have a material impact on the company's valuation. And therefore, these ESG factors are becoming more and more important. Just the focus on financial statements is no longer enough. You need to scrutinize practices of the companies on E, S, and G, and thereby make investments that are more sustainable and therefore drive sustainable profits.
Right, focusing on environment, social and governance parameters. But Chirag, what will the portfolio of the fund comprise of? How many stocks will you select, and which sectors would you focus on?
So the portfolio, how we will build is we will only select liquid companies, and when we define liquidity, it's going to be any stock that trades $1 million a day or and above over the last 12 months. That will find place in our universe. Thereafter, we'll check each stock for ESG compliance. We'll evaluate each company on the E, S, and G parameters in detail, and thereafter, if the company meets the ESG criteria, it could make it to the portfolio, right? So it will be a well-diversified approach. We will benchmark it against a well-diversified index, and that's going to be a starting point. And within each of those sectors, we'll identify companies that are ESG compliant and thereby build a portfolio. So on the minimum and maximum weights, we aim to have companies at a minimum level of 1%, and we aim to have companies at a maximum level of 5%. At market value, it cannot be about 10%, and we will regularly rebalance portfolio such that the companies reflect the true ESG weights of our research. And therefore, we will buy companies accordingly in terms of the ESG criteria that we follow.
Right. So these are the sectors that the funds will focus on. But Chirag, will you be avoiding any sectors?
So as far as sectors are concerned, we don't have a negative exclusion list. What we have negative exclusion list is for companies that are kind of sin stocks, which are harmful for the society, which will include stocks like tobacco stocks, liquor stocks, or be it gambling stocks. So such kind of stocks will not find place in the portfolio, but otherwise each and every sector will be evaluated for the ESG practices, and thereby it will determine whether they have place in the portfolio or not.
So there are index leaders like Reliance Industries, L&T, ITC, which have a weightage in a portfolio. If they don't comply with ESG regulations, how then do you plan to build your portfolio?
That's right. We will look for ESG compliance as a must. They may be the largest companies in the sector, or they might have the highest revenues, the highest profitability. That doesn't matter. What matters is if they are ESG compliant or not. Do they follow ESG practices in terms of looking at the environment, their impact on the society, and have very high standards of governance? Only those stocks will make it to the portfolio.
Right, so ESG compliance is a must, but what kind of returns will this kind of fund deliver over a 5 to 10-year period? Would the return look similar to a multi-cap or a large cap category?
When we look at ESG compliant companies, these are more sustainable businesses, right? Sustainable means that they survive the downturns, they do well when the economy upturns, and therefore these businesses deliver good long-term risk-adjusted performance. And therefore these are quality businesses to own. They will do well during down markets, they will have lower volatility, and therefore over the long term these generate much higher returns. So we expect these stocks or the portfolio built of these stocks to perform much better as compared to the other indices over the long term. These being sustainable businesses, there is lesser risk and therefore a higher long term risk adjusted performance.
Chirag, help us understand which category will this fund be classified in?
So if you see as per SEBI classification, it gets classified as thematic, and therefore 80 to 100% has to be equities. But for all practical purposes, how we build the portfolio is going to be a well-diversified multi-cap equity fund. We are cap agnostic, we are valuation agnostic, and therefore we will build a portfolio that goes across market cap, but only of liquid names. And therefore, that is the approach that we have in terms of building the portfolio. So it will have participation from all market cap companies, given they are ESG compliant.
Right, so it's a thematic fund basically. But how much do you plan to raise from the NFO?
When we talk to investors about this fund, it does appeal to them. It is very intuitively appealing for them. They want to invest in businesses that are good, businesses where longevity drives long-term performance, businesses that are fair, ethical, and therefore they want to make it part of their own portfolio. And therefore, we think we will get a good response in terms of investors looking at this fund more favorably. And therefore, our aim is to reach out to as many investors as we can. And I'm sure that most of the investors will look at it in a favorable way. So we don't have a target amount, but I think the number of investors we reach, this can help those investors invest with their belief system, with their value system, and thereby trying to make a difference while making good returns.
And Chirag, very lastly, what are your expectations from the budget for the mutual fund industry?
So in terms of budget, we don't think that government has much leeway in terms of finances this year, because if you see, they are a little tied up in terms of the fiscal roadmap that was laid down. They might barely be able to match that, and therefore any SOPs that could come to the mutual fund industry are looking not coming this year. Maybe later years they may have some scope in terms of incentivizing the mutual fund industry. And I think from a government perspective, if you see, they are also pro towards clean investing, clean environment, the Swachh Bharat that we have seen. So I think it will make more sense if government incentivizes ESG funds, because there is a match in terms of the way government thinks and the way these funds operate. So in a way, going forward, if the government incentivizes ESG funds, it could go a long way in terms of promoting their agenda.
All right, thanks Chirag for joining us today, and that was Chirag Mehta. Clearly, remember viewers, the fund will primarily invest in stocks of Indian companies which are ESG compliant. ESG stands for Environment, Social and Governance, and will be open for subscription from 21st June to 5th of July. But on that note, that's all for this edition of the MF Guide. Save, invest and prosper with the right guidance right here on Business Television India. More news and updates continue on the other side. Do not go anywhere. Keep watching Business Television India.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.